Hey all, welcome to Billionaire. This is your own Raghu talking here. Now, what are we going to learn today? Now, I have made several videos on psychology, trading psychology. Before you just go to other video, if you are really serious about making money, just watch this video till end. It's going to change your life. Right. Now, what is trading psychology? Everybody knows you should use a stop loss. You should stick to a profit target. Now, this is not just trading psychology. Trading psychology has more depth. And if you just want to listen to the statistics, now any new option trader, I'm talking about option stocks, right? Any new trader, his shelf life, 96% of the people's shelf life is only 1 year, less than 1 year. They all go out. And the remaining 4%, right, out of 100%, the next 2%, they will exit by the end of 2 years. So there are only two people, assuming that if there are 100 people starting trading today, after 2 years, only two people will remain in the trading field. Now, why is that? There's a lot of money, everybody will make money, and I have explained you about a random coin toss. If you just go ahead, put a coin toss, you will never lose 100% continuously. You will never win 100% continuously. So this is random. You don't have any knowledge, any technique, just randomly tossing the coin. Now, what does that mean for trading? Now, in trading, the biggest thing you need to remember here is every learning costs money in trading. This is the biggest psychology. Every learning means you need to understand there is no success without failure in this world. Do you agree with me? Right? You have to fail to become success. Very important, because that failure teaches you a lot of lessons, and the more failure you face, the better it is going to become in the future, isn't it? In a simple logic, right? But just imagine, now I come from IT project management field, you know that. So basically in software field, we have something called as SDLC, software development life cycle. So hope most of you people are aware. Some of you are not aware of it. Let's assume it is kind of waterfall. So we have a project. Let's assume any project. So it is at point A. Now here we envision that plan. When an idea will be envisioned, this idea will be designed, and after designing, they will start developing. Fair enough, very simple. After developing, so they will try to identify whether there is any development defects. We call it as development integrating testing. Then it will go to sit integrating testing. Means it's another where we keep on testing. Next it goes to user acceptance testing. In a simple term, development, did testing one, next testing two, then testing in production, and then it goes to production. Production like environments. Once it goes to production, just imagine there will be a defect. Now assume that some client has asked for an apple, and people develop, test. When it goes to production, that apple will become an orange. So the business person will come and tell, hey dude, what is this? I asked for an apple, you're given me an orange. Now what happens next? From here, it will go back to again planning, design, develop, test, come back. Now this time that apple will become pumpkin. What happens again? It will go back. Now what I'm trying to tell you is, look at the number of efforts and the time needed to go to the end product. And when the end product is not what we desired, it has to go through the rigorous same step, painful step. Trading is very similar to this, guys. Now the new kind of, this is called as a waterfall model, which is very ancient, but currently people have moved on to agile, extreme agile, pivot, a lot of different flavors. And one of the flavor is DevOps, which I would like to tell you what exactly this concept is. This concept is, people tell in this concept, celebrate the failure, which means you take a trade You fail, you celebrate it, enjoy it, take a toast, go have a mug of beer, whatever you want. You want to dance, go dance. Because in this fail, you learn the lesson and make a document of it, note of it, or document it. Because next time when the same thing happens, you should not be doing it. What exactly it is telling is fail first concept. Now, without boring, even in trading, we need to fail fast. Not only first, fail fast. When you fail fast, the success will be long lasting. If similar to the model I explained, you make 10 rupees, you make 20 rupees, you make 50, okay, you lose 100, you lose 2000, keep losing, keep making. You will be repeating in the never ending cycle, guys. You will just remain in this never ending life cycle. It's as simple as that. Keep rotating, 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 and then exit. But suppose you fail fast, you're failing in your step one itself, which is fantastic, celebrate it. Because either you will know whether you're made for this career where it can save a lot of pain, time, and capital, or you will be more determined by learning the lesson, take the next step, and you can keep on going up. Understood? Fail fast. Trading is a field where you need to fail fast to ensure you succeed in the long term. Some people keep doing the same mistakes, whatever method they are using, and repeating the same mistakes and expecting a different results will never work, guys. And second thing, very importantly, trading is a probability, which means every trade has an equal chance of losing and making money. Hope you understand. Every trade you take, it has an equal percentage of losing as well as winning opportunities. So why should you trade? Because you feel you can make money, and there are some price actions which work. So I would like to tell some price actions or technicals which you follow that will help you to make money. Now I have pivots, I have Cambrilla pivots, I have levels, I have Fibonacci, so I have trend lines. Now I have moving averages. Let's say I put moving averages here, right? Okay, I will use 150, 200. And then what do I have? I'll put supply and demand as well. Okay, Waycraft supply and demand. I know everything. I'll put Waycraft supply and demand. So I know the market, how it moves. Then I'll go, okay, I know harmonics. Wow, this is the harmonics pattern. I will go with this. Now, you know so many stuff. So you know Elliott waves as well. Let's go ahead and use some fractals. I will use Elliott waves. Now, how does this sound? No, wow, this is such a beautiful thing. Isn't it amazing? I have so much of knowledge. If you use all this knowledge, what is the output you see on the chart? Do you think you can follow anything, guys? Tell me, do you think you can follow anything? Nothing. You will just go end in a disaster. So first of all, you need to understand trading is a probability, and it should be kept as simple as possible. Now, let me quickly tell you. Now, this is a pivot. You know, above R1, you always have breakout because this is where smart money is there. Below S1, you have smart money. Now, the very first candle, this is 15 minutes broke. So below this, market has an opportunity of going and giving you money. But market starts pulling back. When you see this, it looks very simple. But why is that people take trade here, here, here at the end? Similarly, below S1 is a breakout. So it is very far away, but it goes into range bound. Above R1 is a breakout. It goes into range bound. Here, boom. Here, boom. Likewise, below S1, boom. Right? Do you see? Do you see what I'm telling? Below S1, boom. What is that I'm trying to tell you here is, this will not work every time. Let me be very honest. It is a probability. But whenever it is above R1 or below S1, you will take the trade irrespective of the results because the probability of breakout is more. This is Bank Nifty. If a breakout happens, you will have 1:3, 1:4 profits. So isn't it obvious that you should take a risk here where you can have just 1:1 risk and go for 1:5 if it works? If it does not work, you know there is a 65 percentage probability that pivot will test the CPR on any given day. The probability, this is also a probability. The reverse is also a probability. So when you understand the probability of your each and every trade, what is the probability? Then you will be able to understand, okay, this is the risk I need to take. This is the risk I need to take. Double top, okay, I have a double top, or the probability of double top, breaking the double top, 65% times it fails. Yeah, this is also 65. Double bottom, double top. Oh, I have double bottom. So 65% of probability it fails. So why shouldn't I take a trade here immediately after S1? Because I have the very less stop loss. Instead of taking after closure, why shouldn't I take immediately? A 5 minutes or 10 minutes or above S1. If it comes, yes, I will exit. It's very less stop loss. The way you need to think on the fly, how you want to assess a situation, how you want to take the risk. Very, hope you're getting it. So when you have the probability backing your trade for each and every trade, it becomes that much easier. Remember, a bad experience stays in mind longer than a good experience. So if this worked, it failed. Now let me quickly tell you, this is a 65% chance, right? Now this is Nifty, all right? Nifty trading. What happened on July 1st? Sharp fall. I showed you that I picked up around 60 points. This is a kind of double top for me. Broke. Another double top. Broke. Another double top. This is a kind of triple top. Anyway, understand. So every double top's getting broken. What does it tell? It tells you, okay, market is in a bullish mode. Okay, instead of 65% is straight away breaking it. Okay, I took a stop loss here. So let me wait and see. Okay, this broke. I have a counter trading opportunity where I can make money. If it fails, it fails because you know the risk you're taking. You have the equal opportunity. If 65% probability is getting broken, then you know market is upside. This is your stop loss. See here, it comes, test the same S2, boom. Do you understand how trading works, guys? It is a probability. The way you need to understand it, every trade has equal and opposite opportunities. And whatever trade you're taking, you have to wait until the stop loss hits. If you're not waiting for the stop loss, that is where the disaster happens. Yes, stop loss. Eventually, this stop loss alone will determine your trading psychology and success as a trader. I don't want to drag it too much. That means, where do you need to take the trade? Some people, they want to see green, 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 green. Oh, I enter after S2. Just to see market dropping back, they exit. Then another green, they want to enter here, 2 red candle exit. Oh, green candle, I enter. S2 is broken with a bang. Red candle, oh shit, I exit. Now, these are the people who should be called morons because there is no method to madness. They want to enter when they see the green bar. They want to exit when they see the red bar. Now, this way you will never make money. The only way to make money is, are you catching the bottom? Are you catching the top? Do you see market is taking the support? Top, bottom, support or resistance. Very simple, because trading should be kept simple. Either you will win or you will lose. Stick to it, and the way you need to stick to it is, the moment you take the trade, either you hit your profit target or you will take your stop loss. Simple enough. Either you take the profit. If you have a stop loss of 5 points, you have to go for 5 points target. 10 points target is up to you. But the question is, you have to wait until you take the stop loss. Now, how to put stop loss? This is again an experience, how to put the right stop loss, how to put the right target. They're all simple. Let me be very, very honest with you. They're all simple, but there are 95% of the population who are not using stop loss, who are not using target. They just want to skim the money. They see, oh, boom, enter. They get a thrill, they kind of ecstasy, higher than a drug. So that is where trading is very addictive. That is one of the reasons why you all are trading, because the trading, the win and lose gives you a kick, a thrill. It is very addictive. Even if you're losing money, it's addictive. Even in gambling, right? Why people gamble, even if they're losing, it's always a probability. There will be one trade you will win. Out of 10 trades, you lose one trade, two trades, you will win. So it will make you think, okay, you can recover your money. That is where the gambling, psychology is there. And the same psychology, if you implement in trading, you're bound to lose, you're bound to go for a failure. I'm sorry, this is a little lengthy video, but if you understand what I'm telling is bottom, support, top, top. If you stick to these rules, the discipline, the number of trades, you will better your trading psychology and you're going to make your dream come true by making lakhs together. I felt I need to explain this because on the other day I was teaching my students. It's been 1 month and none of them, except only 1%, almost 6 people, does not have a proper trading psychology. And this was one of my dream project where I wanted to train people on proper trading psychology, because technicals plays only 10% weightage as a trading success. And it looks like that people are not paying enough attention. So I thought I will explain my trading psychology to you guys, how you need to think on the fly. And if it helps, I'll be more than happy. Thanks a lot. Have a good day. Have a great Sunday.